Let's get stuck into stock of the day though. I thought we'd take a look at Star Entertainment. Expecting net debt for FY22 to be in excess of $1 billion despite seeing domestic revenue lift 11% on pre-COVID levels. Normalised revenue should come in around $1.5 billion. This is the company battles with regulator scrutiny, which gaming company isn't, including at its new Brisbane sites, which are meant to be reflected on the balance sheet by the first half of the new financial year. Star Entertainment, Jun Bei, what do you think of the announcement? Would you be in it?
Yeah, so look, I do like this company. It's mainly an asset play. The valuation is so stark. It's a bit like the Crown that we invested in a year ago and then got taken out. So Star is sitting at that valuation below where Crown was taken out. So there's a lot of value sitting in there, and the trading update is actually really good. So their gaming revenue is now already back to pre-COVID level now. Slot is 10% before pre-COVID. So things are going really well in the areas where they opened up. But clearly, Crown hasn't got their license, and they'll open in August. In the Sydney, that might see things slow down somewhat. But still, it's really just tabled. But still, I think that reopening thematic for this company is definitely coming through. Doesn't really have any senior executive, and because of all these issues, and they all stepped down, and we don't know who the next person will be. And there's a lot of uncertainty. That's why it is trading at where it is. A lot of value in its assets. To me, it's a breakup asset play. It's more longer term for investors who want to be involved with this one. It is deep value investment, and it might, share price may not do much for the time being, even though the earnings actually improving. But it's an asset that's not going to stay at this price for very long.
Okay.
It's a
Would
buy.
you be a buyer?
It's a buy.
Okay. Adam?
Yeah, I'm going to take a little bit of a different view because they've still got to get their license approved, so that's a big overshadow of the stock. Now, obviously, there's lots of headwinds that are going on before that, but getting the license approved is a big thing. But that, yes, is one of the issues. They did say that their Queen's Wharf integrated resort in Brisbane is running over budget, will open later than planned, and basically they've said it's cost overruns. So the cost overrun is about 10% higher than prior guidance of 2.6 billion. So potentially, they've said shortages, supply chain, all the usual things that a company will come out, bottlenecks, and even blamed COVID. So there's lots of things that need to go right for the stock to move higher. So I'm going to say it's a hold because I think that it's a fantastic business. Licenses needs to be approved, and if I'm a good investor, I would wait. Like any biotech or anything like that, I will wait till the approval comes through before I put money into it.
Okay. All right.